This program has been made possible in part by the following sponsors. The Trial Lawyers Association of BC. The Vancouver Courier newspaper. My new book about addictions, All the Way Home, Building Recovery That Works. If you are so blessed as to have 2 cents to rub together and maybe a 3rd cent to invest, what's your strategy going to be? This is always a puzzling question without professional help, but especially in these days when some countries far afield are scaring the heck out of everyone. One country is very tiny, less than a third the population of Canada. One country is huge, it's enormous. The first country is Greece, and we needn't go on and on about the bailout. The bailout is still being worked out, but it's in the neighborhood of close to $100 billion, yes, $100 billion. Again, nobody's happy with any of this, except it's going to happen. But here's one of the problems. The other country, by the way, which we'll get to, is China, and it's all about the markets. I'm going to share some things with you, but first I have to tell you that our guest is Adrian Mastracci, a good old friend who actually for years was a sponsor of this program. That's right. And who is with KCM Wealth Management. And what do you call it? What's your tagline? Portfolio
manager.
Portfolio manager. Okay. So I'm going to give you some stuff about this country that's being bailed out for the umpteenth time, and you give me your thoughts about it, okay?
Okay.
So here's a quick list. They falsified their accounts to enter the euro. Massive number of retirees at age 50. 50 drivers per official government car. 45 gardeners for a small lawn with 4 bushes at a hospital. Deaths are often not registered, but pensions continue to be paid. Pensions being paid to people who died in 53, over 50 years ago. 40,000 girls getting a monthly pension of 1,000 euros for some obscure reason, because their parents were civil servants or something. Cardiac pacemakers in Greek hospitals cost 400 times more than what British hospitals paid. Tax fraud is massive. Over 25% of Greeks don't pay a penny on their income. How's this for a comparison to Canada? 1 million officials out of 4 million. 25% of all working people work for a government. That sounds familiar, doesn't it? French retirees receive an average of 51% of their salary. Germany, 40%. North Americans, 41%. Japanese, 34%. Greek pensioners receive 96% of their previous salary, and so on. So it is a profligate country, and we hear, they're just like all of us Canadians who are overextended on our credit cards, and we bought 2 big houses and we're paying 2 big mortgages, only to the nth degree. So what do you make of all this? Even the IMF is now in the picture saying, well, just a minute.
Well, what you're saying, David, is that it's going to be a very long road ahead. It's not going to be an easy fix. And I think Canadians know something about this. Remember a few years ago when our dollar was 65 cents American?
Right.
We were in a pickle. We had a recession going on and stuff like that. Now, we were nowhere near what Greece is into right now.
Yes.
But we had a problem.
Yep.
And the way we fixed the problem was to reduce the dollar that we had to 65 cents.
Right.
And brought it back. And all of a sudden, things are well again. They're not as good this year, let's say, but they're still reasonably well endowed. So that's why I say it's going to be a long road for Greece. They have an economy that's been reduced by 25, 30%, something like that. That's a lot.
And what do they produce? Canada, this enormously, geographically enormous country with all these resources, And we continue to depend so much on natural resources, right? We don't build a lot of things other than...
We ship a lot of things.
We ship a lot of raw materials other than Bombardier, which wouldn't exist without tax dollars, right? And the company they work with, which is a corrupt country, Lavalin, you know. But Greece, what's Greece got besides tourism and olives?
That's it.
11 million people.
That's right.
A beautiful, idyllic place, the seat of Western civilization. How are they going to do you have any sense of how they're going to correct themselves?
Well, like I said, it is going to be a hard road.
Yes.
I'm sure that the Greeks are worried. They don't know exactly what to do. They're probably confused a little bit. I think they're trying to figure out what it is they voted for last year or last week.
Yes.
They've got a problem.
He doesn't stand a chance. What's his face?
Well, whether he
is.
stands a chance or not.
Yes.
There's going to be changes.
Yeah. So let's think about the Greek community here, which is substantial and great contributors to this community. What do you think we as Canadians, is there a ricochet effect at all from this? I mean, it is kind of frightening to see a major country teetering on the edge of total disaster.
Well, I don't think it's going to affect Canada that much, but it certainly will globally.
Yes.
It's a small country. It's about the economy is about the size of Alabama, Louisiana, something like that.
Yeah.
So they're not that big, but still, they're part of the
EU.
The EU.
Yeah.
And the trouble that they have is they can't change the currency. If they could change the currency,
Yes.
maybe we can get them out of the EU for a temporary period, 3, 4, 5 years, something like that, and then bring them back in. So help them out with the economy, and then bring them back in. That might do it, but they got to do something with that currency.
And I think, sorry, go ahead.
Just giving them loans or more loans isn't the answer.
Isn't the answer. And I think on another funny level, I think there's this element of embarrassment for the Merkels. You know, France and Germany in particular, I think, depend on this kind of optimism and buoyancy in working the idea of a unified Europe. And suddenly one of the key players, and who knows, Italy and Spain may be next. You know, the Mediterranean countries, we still have a north and a south, don't we?
We do.
Yeah.
I think the next one over there might be France, of all people. Because,
Really?
well, they've run deficits for 40 years, or thereabouts.
Yes. Yeah.
And you can only do that so long, as you well know.
Yes.
So what are they going to do? I have no idea. But they too are in a bit of a pickle, and they too are going to have to figure out what it is they're going to do.
Yeah.
And the other problem they have as the EU is you've got 19 different countries. Can you imagine trying to get
Everybody to the table.
Everybody on the same yes side or no side.
good luck.
Whichever the case might be. That's a tough one. I have no idea why they did it that way.
Okay, let's go. Let's get in our Learjet and go around the world in the other direction, because the other country that is in a bit of a turmoil, the economy isn't in a turmoil, but the other country is China. And in China, the markets have tanked. The people are selling, panicking, selling like crazy. Almost half of all listed companies in China last week remained halted from trade, and initial public offerings have dropped off. Shanghai Stock Exchange, dropped precipitously. One woman says she lost 820 grand in the last week as shares on the Shanghai and Shenzhen plummeted, and more than half were suspended due to the free fall. Now that's more up your alley, and China has a direct effect on this community.
It does, and one of the things we have to look at for China is that maybe what we call their markets are not markets. Markets are usually free, where there's a buyer and a seller, and they barter a price.
Yes.
It's not always the case in China.
It's different.
It's different over there.
Yeah, explain that. I think people have to know that it's not quite the same as the NASDAQ or the New York Stock Exchange.
Well, the government wants to modify the economy. They want they have to pause on everything, And they've been doing a pretty good job, but every now and then they can't change everything. They can't change their currency. They can't change
Yes.
how they do things. They build cities where you can put in 1 million people, but nobody lives there yet.
Yes, bizarre, isn't it?
So
yeah.
That's a problem. The other thing they're trying to do, they're trying to get their consumers, their population, to be consumers. In North America, we know that the U.S. is about 70% consumer-based.
Yes.
We're a little higher than that, I think, maybe something around the same level. But China is still around 18, 20, something like that.
Really?
So they have a long way to go.
So it's China is in the middle of this very fascinating experiment of communism trying to play with a free market enterprise and finding compromises. And they must be shifting sands almost daily. But also, I think people have to realize that the markets themselves are very different. In a way, they're kind of a Wild West show. Are they not, compared to, if we can talk about stability in North American markets?
Well, when you got 1,500 companies who are now closed for trading,
yes,
or suspended from trading for a while,
yes,
that's not a market anymore.
What is it?
Well, confusion, perhaps, fear. What else can you call it? A lot of Chinese have borrowed a lot of money, put it in the market, and now they find themselves at a loss position, and they have to sell something, but it's halted, so they can't sell the stocks. So what are they going to sell? Real estate? Are they going to sell something else?
Exactly.
They have to find something.
They have quite a few billionaires these days in China, and millionaires, and those folks gained 121 billion through the first half of this year, and then in the last month lost 30 billion.
Well, they're still ahead of the game.
And of course, they have to have the attitude that you probably have, and perhaps Warren Buffett has, I don't know. Hey, it's just paper.
Well, it is just paper to a large degree.
Yes.
That's why one of the things I do when I try to invest in China is not to invest directly into China. I invest through the S&P 500.
Yes.
Those companies, the Microsofts, the
Yes.
Intels, et cetera, they sell to China, they sell to Europe, they sell to a lot of...
And those are about companies that actually produce goods and services.
That's right.
Yeah.
And they usually report it on a reasonably regular basis.
Okay, we're going to take a break. When we come back, let's talk about, we'll leave those two countries and talk about, in markets that are always volatile, what sense do you make of it? That's your job. Okay, Adrian Mastracci from KCM Wealth Management is our guest. We're delighted to have him back here after, I don't know, 2 or 3 years. I think you're on like show 50 or something.
3 years.
And we pause quickly. DavidBerner.com is the site to go to. We're always happy to hear from you on emails, and an opportunity for those folks who support us here to say hello on Shaw, Community Television Cable 4. Back in a sec.
This program has been made possible in part by the following sponsors. The Trial Lawyers Association of BC. The Vancouver Courier newspaper. My new book about addictions, All the Way Home, Building Recovery That Works.
Our guest is Adrian Mastracci from KCM Wealth Management. He works in investor relations, and in your weekly or biweekly, not biweekly, but sometimes you send, it seems to me you send out 2 a week at least, emails. You spoke recently about, maybe you were trying to assuage people's fears about the volatility and about things they read about China and Greece and so on. But you spoke about how markets have always been volatile. Can you take just a moment before we get into how people should, look at investing these days? Why was 29 such a unique disaster compared to all the other recessions and depressions we've had? Because we've had, what, 3 in the last 20 years?
Well, you know, there's something that a lot of people don't know. And just before the recession of 1929,
Yes.
there was a bull market.
A big
bull market.
Yes, yes,
It
yes.
started around 1923, and it ended, of course, in 1929. And it went up 350%, or close to that.
Yes.
The next 4 years took it all away.
Yeah. So what were the circumstances there? Because after World War II, we've never had anything, have we, approaching that? No. We've had bad moments.
Yes.
We've had certain bear markets, but nothing close to that kind of total disaster.
Well, the one disaster that we had, which we recovered from, was 1987.
Yes.
One day, the Dow Jones dropped 22% in just one day. Of course, we come back from all that.
Yes.
But on the day that it's happening, I remember it well. On the day that it's happening,
What time did you get home?
about the usual time. You know, you leave early.
Really?
Actually, there was not much you were going to do, and that's one thing about markets that you have to realize.
Yeah.
You can't change the market. You can't control the markets. You can't do anything to the market.
Once the market's closed and a stock has gone up or down, that's it.
That's it.
Yeah. So let's look at reality here. Folks living in the Lower Mainland, many people are just scraping by, but lots of people live reasonably comfortably and have a couple of bucks, and they want to put it into something. They want to put it into sometimes into a bank, but sometimes something that's more opportune than a bank. So what is the strategy you give people?
Well, one of the strategies that you have to look at first is that you got both bull markets and bear markets.
And they're always going to be...
They're always going to be around. One of them is going to be around somewhere, somehow.
Yes.
I went back to the year 1900
Yes.
with the Dow Jones figures because they have the most data.
Yes.
And if you define a bear market as a minus 15% off your top,
Yes.
then we had about 25 of them since 1900.
In the last century and change.
In the last 115
15 years, yeah.
So you get a bear market roughly every 4.5 years, give or take a little bit.
Aha.
So that's why I say you've got essentially markets that are bearish and markets that are bullish.
Yes.
And if you look at the data, about a third of the time you're in the bear market territory, 2/3 of the time you're going up. So at least
That's better than baseball.
that's better than baseball.
Because in baseball, it's the reverse. If you bat 300, you're in Cooperstown.
Exactly.
Which means that these guys, who are the highest paid athletes in the world, fail 70% of the time.
So essentially, when you got those good data
Yes.
numbers in your favor, that's when you got to say to yourself, well, how do I play this market?
Yes.
I mean, you're going to get both. So there's no point in saying, well, I'm just going to get out of the markets when the going is bad, because you won't do that.
And the answer is? Yeah.
The answer is very simple.
Yes.
You have to become a bit of a contrarian. So you do things that maybe not everybody does. And here's what I do. If the prices are going up, you sell something. Yes, sell some of the winners. I said some, not all the winners.
Yes, yes.
Okay? And if prices come down, you buy some of the losers.
So this is, you see, this is counterintuitive.
It is.
And what happens, and that's, I think, often why we sometimes have runs on markets, that we suddenly see some dips, we start going into a bear phase, and people freak out, and they start selling everything.
At exactly the wrong time.
But there's guys like you and your buddy Warren, they go, oh, I think that's a good price. I think I better buy some of that because it's going to come back.
Exactly. And I think if you look at what Warren does,
Yes.
as far as those individual picks, he does a lot of that. Buy it when it's down,
Yes.
and sell it when it's up.
Okay, let's refine this because this is such an interesting approach, and I think so many people don't know this. Let's look at the selling sum. It's the sum part that interests me. So when you have a bear market and prices are going down, no, sorry, the other way. When you have a bull market and you say it.
When prices are going up,
Yes,
you have a bull market.
yes,
So what you try and do is take a little profit
yes.
on stuff that you have.
Okay, let's say I have 10 investments across a board, a wide variety. How do I choose? I know that's your job to recommend to me, but how does one choose okay, which ones am I going to take some cash and run, and which ones do I hold steady on?
Well, the prelude to that is
Yes.
that you should have had an asset mix. In other words, you should know how much should be in stocks, how much should be in those boring bonds,
Yes.
and stick with that. So if they were equal to begin with, let's say that you had 50 cents in stocks and 50 cents in bonds,
Yes,
and the stocks went up to 60 cents,
yes,
well, you sell some of the stocks.
yes.
Bring it back to
Yeah.
50
Hold the bonds.
and hold the bonds,
Yes.
or buy some bonds to make it 50-50 again.
Aha.
If it goes the other way, if your
Yes.
bonds happen to be going up, heaven
Yes.
forbid,
Yes.
then you do the same thing. You scale back on some of the bonds, and you buy some of the stocks.
Now, this shows you how ignorant I am. Do bonds typically go up?
Sometimes.
Not a lot.
We've had a 30-year bull market in bonds
Truly.
from about mid-'85.
Yes.
If you looked at the U.S. 20-year Treasury bill, it was then around 16%, 15 and 7/8. Let's say 16%.
Yeah.
It is now under 2%, under 1%. So bonds have been going, bond prices have been going up.
Yes.
Bond yields have been coming down.
Down. Yeah.
And
Okay.
certainly anybody that saves money knows that they're not getting anything.
So, sitting in Vancouver on this date, name 3 bonds that you might feel comfortable buying or recommending to your clients today. When we say bonds, I mean every Cleveland issues bonds. You know, San Mateo issues bonds. Everybody issues bonds.
I buy baskets of bonds. I don't buy individual bonds
Really?
because I don't know. I can't tell you which one of those bonds is going to be the winner or which one's going to be the loser. So I buy a basket.
Yes.
And I've got safety in numbers. So I might have 20, 30, 40, 50 in a basket.
Truly.
So
Interesting.
the idea is that if one of them falls out of bed,
Yeah,
they're not going to hurt you.
The others are going to carry
But
it.
if I only got 3
Yeah.
and one of them falls out of bed,
Then it's a
I'm
problem.
going to feel it.
Yeah.
So you try and avoid that.
Yeah. Okay. So just repeat your basic premise again. When markets go up,
When markets go up,
take a little profit,
Take a
sell
little
a bit, hold on to some reliable stuff.
yes.
Yeah.
So buy some quality,
Yeah.
and when it comes to sell it, you can sell it. And similarly, when it goes the other way, when prices come down, when the bear market comes along, say yippee instead of oh my God.
Well, speaking of yippee, so what does the person living in Kerrisdale or Strathcona or Langley reading the paper and reading about billionaires losing fortunes overnight in the Shenzhen market and so on, what should they do? Just ignore that? Just look at it and say, well, that's interesting.
No, you say I'm going to hold my nose
Yes.
because it's probably counterintuitive to what I'm used to.
Yes.
But I'm going to buy some good stuff. I'm going to buy some quality. I don't want the risky stuff. I want quality things.
Yes.
And I'm going to buy them at the lower price or even lower because I know that bear markets can go on for a while. They usually go on for 3 months to 3 years. So you can be stuck for a while in a bear market. So the idea is to buy something and just put it away. You're a long-term investor. You should have at least a 5-year, 10-year, 15-year view. And people say, well, I'm 60, I'm 65. Well, even at 60, 65, if your longevity is 30 years,
Yes.
there's your 30-year view.
I'm gathering from what you're saying that you're not a close cousin of people who play penny stocks every day and
I haven't played a penny stock in
1,000 years.
1,000 years.
Yeah, it's just not your cup of tea.
No.
It doesn't work for you. Or your
I
clients.
can't pick individual stocks, especially the risky stocks.
And what about ores? What about gold and silver and so on? Do you recommend those in your mix?
The trouble with gold and silver and stuff like that is that there's no cash flow. There's no dividend from that.
Uh-huh.
And we like dividends.
So
we actually like cash dividends. It's the only ones I can
You
spend.
sound like my son. My son always says, "Invoicing's great, Dad. Stick to invoicing."
He's got a point.
Yeah, it's great when you send out a bill. Yeah,
Exactly.
yeah.
So I think if you stick to those very simple ideas, most times they'll work. Are you going to get burnt on occasion? Yes, you are.
Yeah.
But if you got enough things in your portfolio, and if you got enough consideration for what you bought, if you got quality, stuff like that, then on occasion something will come along and they'll sort of You'll get a bit of a boot, but you can do reasonably well.
I think I told you years ago that I had a investment counselor at one point, and I had shares in the Bank of Montreal, and he strongly advised me to get rid of them, and I fired him on the basis of that recommendation. I walked out. I took my 4 cents with me. The banks have marble floors. What are you talking about?
And they have sustainable businesses.
And they have businesses that apparently work. And do we not in Canada have just about the most secure banks on the planet? I mean, this isn't Uncle Milt's bank like in Wichita, Kansas.
And if you own all the banks,
Yes.
and there aren't that many in Canada,
Yes.
as we know.
Yes.
If you own even the top 5, the top 6 or 7,
Yeah.
you do quite well, especially on the dividends.
Yes.
A lot of them have increased the dividends, so you look for an increasing dividend if you can possibly get it. So if some of those.
I don't expect, we were out of time. I don't expect to, I'm 2,000 years old, so I don't expect to be making a lot of money in the next little while. But if I do, I'm coming and giving it to you. Adrian, many thanks.
Thank you.
Adrian Mastracci from KCM Wealth Management. Check him out. He knows what he's doing. The man is a zillionaire. No. Next week, Dr. No, the return of Jordan Bateman from Canadian Taxpayers. He was right here on this show saying no, no, no to that plebiscite. And I was singing the song with him. And we're going to gloat for the first half of the show next week. Then we'll talk about what people should really do about transit. Thanks for being with us here on Shaw Community Television Cable 4. Good night.